Let's give you the markets update now. And world market trade has seen extended gains supported by strong tech earnings. The JSE has also followed the global peers, while the rand continues to claw back recent losses. Citadel Global's Bianca Botes speaks to us now about what we can expect from today's trade. Bianca, good morning to you. Let's begin with what's emerging, at least for you, as notable in the global market trade so far this morning.
Good morning to you and the viewers at home. There's really two things that stood out for me over the past 2 days, yesterday and this morning. And that is the US PMI numbers that was released yesterday. And those numbers indicated that US business activity grew more than expected, with both services and manufacturing expanding. And then, of course, China announced that they will cut bank reserves in an effort to stimulate the economy. That move will see a $140 billion injection into the Chinese economy, bringing some cheer to Chinese stocks and commodities, with copper prices hitting a 3-week high.
So let's then focus the attention on what is to be said about the performance of emerging market currencies. Let's include our very own, the rand.
Emerging market currencies saw a welcome boost on the back of this Chinese stimulus, with emerging market currencies advancing for a 5th consecutive day. However, gains started to fade towards the end of the Chinese trading session. The rand actually strengthened from the 1920 mark, leading the EM gains. As market sentiment improved, the rand is, however, currently struggling to hold on to significant gains below the 1890 mark, and we will keep a close eye on other market developments to really see clear direction for the local currency.
Oil prices holding steady, and gold, at the moment, at least, it's firmed up. Talk us through the commodities cycle.
So when we start looking at oil prices, obviously what we are mainly concerned about is supply constraints given the tension in the Middle East. With the Chinese stimulus, we can also expect additional demand that wasn't necessarily anticipated initially. Brent crude oil prices are hovering near 1-month highs, currently sitting just above the $80 per barrel mark. And we will continue to keep a close eye on those developments in the Middle East to make sure exactly where those oil prices could continue to rise to, and whether or not sufficient supply will be available in the market to meet the new anticipated increase in demand. Gold prices taking their cues from dollar interest rate expectations. We've seen some sell-off in the gold price, as safe haven investors are flocking back to the dollar, given the fact that they would be able to earn higher interest rates for longer there. We are also seeing that the uncertainty in markets have created safe haven demand. And initially in January, the gold price benefited from this, reaching highs of $2,060 per fine ounce. But we have seen some of those gains being unwound as investors look for higher yielding opportunities.
Let's conclude with the domestic market anticipating the first interest rates decision for the year today from the Reserve Bank's MPC. I know that at the moment, at least the reportage is that sentiment is mixed. Where do you stand as to what that decision is going to be today?
We expect a cautious approach from the Reserve Bank, and they've actually faced quite a bit of pressure to rather prioritize economic growth over inflation. However, the SARB has reiterated multiple times that they will stick to their inflation mandate and that you cannot grow an economy sustainably just by lowering interest rates. We therefore expect the SARB to keep interest rates on hold until July, as they aim to achieve inflation closer to the midpoint of the target band, which is 4.5%, while inflation currently sits above 5%.
Bianca Botes is with Citadel Global. Thank you very much for that markets update.